How's it going, fellow traders? It's Magic Trader here, and this is a CFTC report for December 5th, 2017. Here's a snapshot of the latest data that was collected from the hedge funds on all the major currency pairs in the US dollar. And here is gold. So what do we see with gold? What have the institutions been up to in respects to gold? So, excuse me, lump in my throat. So what we can see is that institutions were heavily long biased gold right here, very aggressive, on November 28. So on November 28, they had 287,000 positions to the long side, and shorts were 62,000 and very cooled off. And what we can see is that in terms of percentage, 82% of their overall exposure was geared to the long side. All right. Excuse me. So if we take a look back, I want to show you something here, right here. I want to go back and show you something here. If we take a look at gold, right? And we take a look at their exposure here, right here, 82% on November 28. Okay? Now let's scroll down to see when was the last time the institutions were 82% of their overall exposure to the long side. We'd have to come back to here, right? September and June. So mid-June to the end of September. Okay? So mid-June to the end of September. So now let's take a look at, where are you? Right here. Mid-June to the end of September. Let's go take a look here. Mid-June to the end of September here. Okay, let's confirm this. Mid-June right here. This area here. Okay? Pretty much this area right here. And so, what do we see? Were they heavily long biased for a reason? Absolutely they were, because take a look at this rally up here, right? You'd have to be long biased to cause price to come up here. But when they were 82% exposed to the long side, what eventually happened with price? Dropped. Now, why did it drop? Well, because they can only be so much exposed to the long side, and then eventually they have to do something with their positions, either hold, but if there's no one left to buy, then price has to revert and drop. And when price reverts and drops, well, they're going to sell those long positions so they can take profits, and then maybe start piling on some shorts to take advantage of a move to the downside, right? So let's get back to examining this here. So we were at those highs, and then they dropped. Exposure to 76, 66, 65. Always more long than short bias, but we saw a decline. They closed off longs to take profits, and increasing shorts from 16, 18 to 35s. So then, starting in January, we see the increase slowly happening. March, April, starting to get up there. Dropped again in July, but then August, September, touching that area, and then boom. We get there again on November 28. We get there November 28, which was up here, and now we're starting to see a decline. Why are we seeing that decline? Well, we're reaching that 82% mark again, where they are so overly exposed to the long side that the only way for price to make any more of a movement is for them to take profits on those longs and to allow price to react accordingly. So when you take profits on longs, price drops. When you close out 36,000 long positions, it causes price to drop. Okay, then they add 15,000 short, so they close 30-something thousand longs and they add shorts. So that ends up causing price to drop, which is what we saw. So let's get back to the data. Right here. Let's get back to this data here. So a big drop in long, so closing long positions right here at this consolidation candle. Remember, we were worried here with this rally up. This rally up was caused by shorts being closed off, not so much longs being added. Okay. And then we saw a little bit of adding of longs, only to have them closed off here and adding shorts, which eventually is causing this drop in price. Okay, so now we're getting this drop in price. We're entering deeper within the monthly non-2-to-1 demand zone here. Located, nested within it, is this area of weekly demand, but this is a lower quality weekly demand zone, so it could just eventually break and we could eventually see price declining down here. That's a possibility, because remember, at the end of the day, this monthly area of demand was very poorly formed, right? Hardly a move away from it, very poorly formed. So it could easily break and we could see a bigger drop to the downside, like here. All right. Okay, so that's gold. Let's take a look at oil. So oil, we see a small decline in long positions from 763,000 to 759,000. We also see a decline in shorts from 153,000 to 148,000. So oil is the same thing. We're at 84% long exposure on oil. So knowing that, let's take a look at oil. So oil, last time they were at these numbers, we were back in January, February, March. So let's just take a look. January, February, March. January, February, March. Let's take a look here. January, February, March. January, February, March. Right here was the last time they had that much exposure to the long side. And again, price declines, they reduce longs, and they get back into their longs here for another rally upwards. Okay, January, February, March. 68,000 long positions, they reduce it to 647, 618, and then on the rally they add, then they subtract 595,000, and then since then they've been adding. So at their peak they were at 712,000 positions long. Now we're at 759,000 positions long. And 84% of their overall exposure geared to the long side. So we have to be a little bit cautious, because we can't ignore the fact that last time they were this overly exposed to the long side, they ended up taking profits, reducing long exposure by a significant quantity, and then eventually getting in long again at a better price. Right? Overly exposed, profit taking, and then they get in lower for more profits to the upside. So it makes sense, and if you start to put the pieces of the puzzle together, you can see what they do. You can see how they move around with their price, right? You can see how they do that. What's going on here? What just happened? Oh, something weird is happening. Let's see. Huh. Strange. Okay. Okay. Something happened. Really strange. There we go. Okay, so yeah, we got to be cautious. Even though we're sitting within a weekly supply zone that has a very poor formation, yes, price can just break up to the upside, but I'm going to be very cautious right now taking longs because of that overexposure to the long side. So, going to be cautious, going to keep an eye on this, and I'm going to learn from this experience to see how the institutions are going to trade this right now. All right? So let's get on to the US dollar. So what do we see here with the US dollar? We see that longs are pretty much sitting at 24,000 and shorts were reduced from 35,000 to 32,000. All right, and that happened as we consolidated here on the weekly chart. So we consolidate and they reduce short exposure. 57% of their overall exposure is geared to the short side. Net positions is negative 8,000 positions. So you take a look at the 3-month chart. It looks like we're consolidating and ready for a move to the downside. Big overextension here on the monthly chart. It looks like price wants to rally up, but I'm not so sure of that right now. So right now we're in between zones. We're in between a weekly supply. We're in between a weekly demand. So it's hard to say what direction price is going to go. So it's best to just sit in the sidelines and not take any direction on this US dollar. So I have a bias that price is going to drop, but that might not happen right now. So I'm just sitting and waiting to see what happens. Aussie. So again, in September, overexposed to the long side, 80%, right? September 26, 24, right here. Overexposed to the long side. What happens? They close their longs, reduce them, price drops. Now we're entering into territory where they last added. Last time they got to the 50% range, they added back to their longs and caused price to rally up again. Now we can see the coloration of the cells starting to become a little bit more neutral as we push down, right? All this data comes as we consolidated at that weekly non-2-to-1 supply area. Okay. Longs increase 78 to 83,000 positions, as well as shorts. So why are they adding longs as well as shorts as price drops? Well, it could be because we're at this nice comfortable range here where they can start adding longs again because they're not overly exposed at the 80% range. And yeah, they believe maybe a little bit more of a drop, and then they're going to take price higher. Maybe they're thinking that. Maybe that's why they're adding longs and shorts right now, because they want to average their long price, get a better price. That's a possibility. Like I said, I've been waiting for this weekly area of supply to get removed before taking longs, because that's a big obstacle. And even though it didn't make a nice 2-to-1 move away, we still have to respect that area. And so respecting that area saved me from taking long positions and taking losses on those longs if I would have taken them. So waiting for a reaction to the upside, I want to see what the institutions are doing. I want to see clear signs that they're adding longs. And I want to see a clear shift in momentum to the upside. US CAD, so what do we see here? We see that longs increase by 2,000, shorts slightly decrease. Short exposure decreases by 2 points to 73%. And we're still at this area of this weekly imbalance. Okay, we got this nice strong push to the upside. But does that mean we're going to break through? Not necessarily. We could. I mean, if you take a look at the technicals, it definitely looks like on the monthly chart price wants to come up here before a drop. But it's hard to say. Price could just stall out here and then drop. So All I know is the institutions hold 73% of their overall exposure to the short side. And here we have again, look, overexposure to the long side, 84%, and then a decline. Overexposure to the short side in October, and then goes back to regular numbers, 73%. So we could start adding shorts again up here. Overly exposed, so they took profits as price dropped, and now add again short. That could potentially play out right now. This one's a difficult chart to read. I think if you looked at just pure technicals, weekly supply is still holding, so it looks like price is going to drop. Looking at the monthly, it looks like price is going to go up higher. So because there's just not a clear sign of what's going to happen, I'm not taking any trades on this one. US Swiss franc. So longs holding at 47,000, shorts holding at 17,000, long exposure holding at 73%. Highs were 86 that we can see in recent history. But monthly supply is in control, so price dictates a move to the downside. So the fact that US CAD is hitting that weekly imbalance and not breaking it shows that price could drop. The fact that the US dollar on the 3-month chart is consolidating, which leads me to believe that price could drop. All these things are tied together for a potential drop on the US pairs. Euro. So what do we see here in the euro? 205,000 to the long side, 112 to the short side. So let's take a look again and see what we find here. So euro. Let's take a look at some historical data and see what we find. Right now we're 65% geared to the long side. 205 positions. Let's see if we have data that shows us the last time there's 205,000 positions. At least I might not have collected the data going back that far. Nope, never have they been so long exposed to the long side. 205,000. So 65%, have they been higher than 65%? No, they've never been 65% geared to the long side, at least going back to the data that I have. In January 2015, January 2015, January 2016, January 2017. Yeah, so that's 2015 data right there. So going back 2 years, almost 3 years, never been that overly exposed to the long side. So we're at 65% of their overall exposure geared to the long side. So 65% of their overall exposure. 65 is a low number. And as we've seen with some of the other pairs, when they're super aggressive, we see numbers in the 80s. 80s and 90s, right? So what does this tell us? That we could see more of a move to the upside, right? That's possible. We have this really nice area here of weekly supply where 19,000 long positions were last filled, and we're just coming shy of that. So we could see a further drop and then a move to the upside. If you look at the 3-month chart, again, we're consolidating in preparation for a move up. Very possible. So long exposure increases the net positions from 89,000 to 93,000. Long bias here. Not much more to see here. Pound US dollar. What do we see with the pound US dollar? We see that longs increase significantly, and that comes as we moved upwards here. Long exposure went from 66,000 positions to 89,000 positions, but they also increased shorts from 61 to 82. Well, then we see that we did get a decline in price. Long exposure. 52% of their overall exposure is geared to the long side. So you could see clearly that there's, you know, potential for a bigger move to the upside here. 52% of their overall exposure is geared to the long side, which is nothing. But based on previous data, there's definitely a long bias here, right? So definitely a larger move to the upside could happen. So waiting for new setups to present themselves for me to get in long here. US dollar, Japanese yen. This one's been a really tricky one. Really tricky chart. But again, long overexposed to the long side, 81%. What happens every time they reach these 80 numbers? July. June, July here. A decline in price. And then they build up again. Right now we're at 81%. So let's take a look at this here. So 81% last time was in July 2017. January of this year. Let's see what the US dollar, Japanese yen was doing in January. November, October, September, August, June, May, April. Let's go to a weekly chart. April, January. Boom. Take a look at that. January 15. So, overly exposed. I moved to the downside. So, just as we suspected, every time they're overly exposed in these high 80s, they end up closing off their longs and letting price drop. So, very interesting. January, let's go back. November, December of 2015. November, December 2015. November, December 2015. November, December 2015. Right here, boom. Last time they were overexposed to long side, look what happened. Drop. So, again, very telling when looking at them being overly exposed. There's only so much they can open to the long side, right? There's only so much they can go long. And when they've outdone themselves in terms of adding enough long positions, they start to close off those long positions to take profits. So let's get back to analyzing this. So now we're at these 81%, and I did some reanalyzing of the charts over the weekend. And it's amazing how sometimes your mind wants to see something, and so therefore your mind makes you see what you want to see. You know, one of the key things in trading is to always be objective. Okay, is to look at the markets and to see what's actually there. Not what you want to see, but to see what's actually there. And then to trade that. So this weekend I went through some meditation, some exercises on how to withdraw myself from my beliefs and from what I want to see. And I did some really tough analysis and got to the nitty-gritty of what's really happening on the charts here, and I was able to determine that we actually have a weekly supply area right here. And you know what? Come to think about it, let's do something together. I want to check something out here. This will be very telling, very interesting. Let's see, November 5. November 5th, October 22nd, and November 5th. October 22nd and November 5th. October 22nd and November 5th. October 22nd and November 5th. So between October 22nd and November 5th, longs increased from 176 to 182. Not much. And shorts decreased from 60 to 54. So up in these areas, longs were increasing. And then we had the drop that began November 12th. So November 12th. So it started November 12th. So looking at November 14 would only show us what was in the process. November 21st. The start of this candle. A little bit into that candle. So November 21st. November 21st showed us that there is a huge decline in longs from 185,000 to 166,000. So they closed off longs, a large percentage of their long positions, 185,000 to 166,000. And in the process they closed off some shorts too. So this big decline was because of profit taking. So again, makes sense, right? We're at these high numbers. What do? They eventually close off long positions. Close off long positions created supply. So when they need to close off long positions, right? When you're closing off selling positions or long positions, you need sell orders to come into the market. A large amount of sell orders to match the buy orders that are being held, right? You're holding longs. You need shorts to come into the market to fill, and those longs to fill those shorts to cause a decline. And what happened is this weekly area of demand got removed, price dropped through it, and now we're retracing right back up to that weekly area of supply. So right now, weekly area of supply is in control, and 81% geared to the long side. Overexposed to the long side. Weekly supply and control. US dollar on higher time frame charts looks like it wants to drop. US CAD hitting weekly supply imbalance. US Swiss franc hitting that monthly area supply. Looks like price is going to drop. And in fact, in my latest analysis, this area of demand does not even exist, which means there's nothing to stop price from dropping down here. So that's just what I'm seeing after the analysis that I did and taking a look at this overexposure. So that's what I'm seeing right now. Okay, so let's go to the last one, the Kiwi. Kiwi is 61% exposed to the short side. But we have a weekly area of demand and control right here. So it's very possible that price rallies up to this weekly area of supply, even though net positions is a negative 12,000, right? May 16, we saw numbers of the 67 range. May, March, April, May. And then price rallied. Getting back to those territories. Potential rally up here. Okay? So 24,000 long, 37,000 short. Shorts are aggressive, 61%. And let's take a look one last time at the Kiwi data. Take a look, 61%. Let's see, 65%, 67. Going back 3 years, 66, 67 has been the highest. They've been exposed to the short side. And we're at the 60 area again. So, could mean they're ready for a rally. And then eventually add shorts higher. Alright, So this week we got a lot of data coming out. On Wednesday we have the interest rate decision, and on Thursday we have the Swiss National Bank coming out with the interest rate, the Bank of England coming out with their interest rate, and then we have the ECB coming out with their interest rate decision on Thursday. So a lot of things are going to make this market move. So take all this information into consideration when planning your trades, and let's see what's going to happen. Next week when we do this report, we'll see if these ideas came into play with what we were discussing today in this video. Alright, hope you guys are learning alongside with me, and I hope you guys are prepared or feeling prepared for trading this week. Until next week, have yourself a good trading week. Take care.